MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, Senior Advisor at VoiceRatings.com. Welcome back to the show.
Thanks for having me on.
The failure of gold. Everybody thought perhaps it would break out by now. It hasn't. What's happening there?
Yeah, well, actually, gold is up. It got over 1260 on Monday, and but then pulled back a little bit. For me, the real market is that this breakout probably isn't going to work out is that gold miners are not reacting well. You know, and for weeks, gold miners outperformed gold, which I think was people buying gold miners in anticipation of the seasonally strong season that gold has starting this time of year into like the end of the year. That's usually when gold goes higher. So I think people picked up gold miners, and so that's why gold miners were doing so well. But now, even with gold popping higher, which happened because the U.S. dollar went lower, by the way. Even though that's happening, gold stocks, generally speaking, are not doing well. They are not following along. And you really need that confirmation to really believe in the rally. I would prefer to be wrong about this. I would prefer for both gold and miners to take off because I have both. But I'm just not feeling the love in that sector today.
When cryptocurrencies were hot, was money that would have gone into gold siphoned off?
Yes, absolutely. And so now cryptocurrencies are cold. Where is the money going? It seems to be going into just the bank. I think people are more worried about this trade war, or TIF, or else whatever you want to call it, than they really let on. And so people aren't sure what's going to happen with assets, so they're just kind of stashing some money away for what comes next. What comes next, by the way, there's two views on what's going to happen with the trade war. I don't think anyone's saying that it'll be over quickly anymore. That's the hope I clung to. But now that we're in it, both President Trump and President Xi of China have way too much committed to this. So it's not going to be easy for either of them to back down. And so we're probably going to see worsening trade tariffs and like that kind of thing. But the question is how much it actually impacts the economy. The consensus estimate is that it'll shave a 0.5 percentage point off GDP growth next year, which is not a lot. And so if that consensus turns out to be true, that won't be a real problem. But there are some outlying predictors, people who say that this could cause a real collapse in the manufacturing industry, that kind of thing. And so if those people, and there's not very many of them, I have to say, there are not, but if they are right, that could, really trigger a shock in the markets. Now, one thing that we know will happen with the trade war is we'll see higher inflation, and inflation is already pretty hot. CPI is at 2.86%, or at least it was in May. That's when the last number came out, and so that's above the Fed's 2% target, and so you know that that it'll go higher simply because these tariffs will be added onto everything, and that gets passed through to the end user, which is you and me, all the consumers. So we'll end up paying more. And one thing I find interesting is the yield on the 10-year is now 2.85%, which is lower than inflation. And I'm wondering who wants to give the government money for 10 years when inflation is literally eating away at it. So that's kind of an interesting conundrum as well. That doesn't mean bonds necessarily have to go down and yields go higher. For example, if everyone got scared out of the market, then we would see bonds go higher again. But that's not really a scenario you want either. And so I think what this all boils down to is, even though markets had a tremendously bullish day on Monday, I believe that it's really ignoring some like flashing warning signs that perhaps people should be a bit more cautious.
We'll have more with Sean Brodrick right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Brodrick Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Brodrick's management has extensive potash exploration and development experience in Thailand. Brodrick will have marketing advantage compared to Western producers. Drill program commences this spring. Brodrick trades on the TSX Venture, symbol BCV, and on Frankfurt, symbol V8V2. Visit our website, brodrickventures.com.
Welcome back. We're speaking with Sean Brodrick. Sean, China seems to be targeting its tariffs at particular states that were pro-Trump, Tennessee whiskey, and so on. Is that a concern in the U.S.?
Well, I guess it's a concern for the people who make whiskey and grow soybeans. You could say that. You could also say that those are the parts of the country that actually make things that we export to China. They buy soybeans, they buy whiskey, and we do have a huge trade imbalance with China. So it's, you have to look at what we actually sell them, and I think they're raising tariffs on those things that we actually sell them. Now, here's the thing, though, is that we raised some tariffs on them. The Chinese responded by raising their own tariffs. President Trump said if they did that, he was going to raise tariffs on a whole bunch more stuff. So now we're waiting for the other shoe to drop. And so what happens if he does raise those tariffs? What happens then? What will China do then? Now, the good news is I think that the U.S. will win any trade war with China simply because they sell us so much more stuff than we sell them. Just the logic of it says, you know what, as long as you can tough it out, you'll actually win that thing eventually. And President Trump is right to be angry about a bunch of this stuff. The Chinese did steal technology. They do engage in unfair trade practices, so on and so forth. It's just, I think his answer to this problem is not the solution we really need.
What about Canadian steel and aluminum? What did Canada do to the U.S.?
Yeah, I'm sorry about that. And and about newsprint and stuff like that. I end up apologizing to my Canadian friends a lot lately. That's good for U.S. steel mills, I guess, but that's, again, not good for U.S. end users, because that means that we have to put more expensive steel into U.S. products, which makes products more expensive. That's why the prices of cars, that is being widely predicted, the price of cars will go higher, and especially if, like, auto parts and things like that end up on the tariff list, you could see quite a rise in the price of cars. So, I don't know. I hope things go well. I hope that those people who predict there won't be much impact on the economy are right. I do know there are some people out there who say it'll have a huge impact on the economy. I hope they're not right. But again, that's why there's so much uncertainty in the market right now. And even if we have a big up day, like we had on Monday, you just have to remember those bearish forces are out there. So you want to keep your eye on them.
We'll have more with Sean Brodrick right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Sean Brodrick. Sean, what's going on with crude?
Crude? Well, crude's making my portfolio look good, I have to say. I mean, and it's shown incredible strength. That said, a pullback here wouldn't be surprising. What will the oil stocks do when that happens? Right now, looking at the stocks in my portfolio, I mean, the leaders are energy stocks. They just are. Those are the ones that are really up. And so, maybe, if we do see a pullback in crude, which would not be surprising, these things zig and zag, maybe those stocks that have run up a lot will pull back. So, I don't think this is a time when you put on new energy positions. You want to wait for a pullback before you do that.
Now, when we say energy, I know Shell last year bought up some huge wind farms in Europe for billions of dollars. Are we looking in the future where if you invest in Shell or some other energy company, it really is energy and not just oil?
Well, I think that depends on the company. Some companies love to be specialized, you know. I mean, they really like to concentrate on what they do well. A company like Shell is a huge conglomerate anyway. Of course, it's going to branch out into other things. We'll see if they make up, you know, if they end up making money or if they, like, turn around 5 years from now and say, what were we thinking? This was the dumbest investment we've done in a while. So we'll have to see if, how it works out for them.
Yes, I remember Britain's wind farms were becalmed for a couple of weeks and threw the country into some kind of energy crisis as well. Maybe they should be
Well, that's why you need nuclear power, you know? I mean, you need something that actually works all the time. That's why I think that's one of the reasons why I think we'll have a nuclear renaissance. And that is actually the most exciting part of the market for me right now.
Uranium?
Oh, yeah. I mean, we've done very well with uranium. Now the uranium stocks generally were pulling back a bit on Monday, but that's okay. You know, I mean, money flows in and out, but the underlying fundamentals are very, very strong. 16% of global supply was taken off the market in the past year. And there's a new uranium fund that's actually buying physical uranium from Kazakhstan, and so that's going to take supply off the market. So look at those things. Look at how many new reactors are going to be built in China, around the rest of Asia. Look at Japan turning its nuclear reactors back on. I think that the future is quite bright for nuclear power indeed. And select uranium stocks, I mean, they've been doing great for me so far. I expect them to continue doing well.
And I would imagine, too, they're going to make the new plants a little more earthquake-proof.
Yeah, well, here's the funny thing. The old plants, and, you know, the ones they built back in the 50s and 60s and like stuff like that, they actually built them to actually make bomb-grade material as, like, a byproduct, because they knew they wanted that for nuclear weapons, right? Now nobody wants that. So they can make the plants much safer off the get-go, so that you don't end up with that bad stuff. That's just one of the many, many things they can do. They'll be much more hardened against earthquakes and, like, that kind of thing, and just be safer all around. But, I mean, look at cars nowadays. The cars you can buy now, compared to the cars they made, say, 40 years ago, they're much, much safer. You know, it's that's just an obvious advance in technology that you're going to have.
Yeah, I think my car's got airbags for the airbags.
I know. I have them on the side, on the front, behind. They're all over.
Why don't they put them on the outside?
I like your idea. Let's do that.
Marijuana stocks. What do you think they're going to do?
Oh, I say that there's another run for our friends up in Canada. And not only in Canada. I mean, they were really beaten down with a shovel in the U.S., but, I mean, this is where the action's going to be. About $8.5 billion was spent on legal marijuana in the U.S. last year. But that's expected to reach $22 billion by 2022, and that's not that far away. It's just 4 years from now. So look at the growth potential there. It's just really enormous. In Canada, you know, October 17th is coming up. Those companies that can expand to meet demand in that time frame probably will do well, or I should say they have the potential to do well. Some are really overvalued anyway, and they just won't. But I still think there are some gems there that could do very well indeed.
Interest rates and inflation. Are we going to see a return to the early 80s where we were paying 21%?
Yeah, I was just talking about this. I don't think we're going that high, but it's definitely going higher. The fact that inflation is going up, you know, the Fed's terrified of inflation, just terrified of inflation. And they have one response to it, and that's to yank interest rates higher. So that's what we're going to see. And they will yank rates higher just like they have before until they yank it too much. That's what they've always done. I don't know why they never learned from the past, but here you go. So they'll raise rates. It'll finally slow things down enough that, you know, things start to go on the downhill slope. Everybody will panic and all that stuff. You can see it coming. It's, you know, kind of a sad story. I don't know why they never learned from the past, but yes, we will have higher interest rates and higher inflation. Those things are really getting a boost from the trade dispute that we have between the U.S. and China, though the U.S. now has trade disputes with everybody. So, you know, I guess people just have to pick a number.
Do you think the rest of the world will gang up on the U.S. and the U.S. will find itself on the outside looking in?
Well, that gives the world a lot more credit for being organized than I think it actually has. The world as a whole, I mean, if you look at the UN, they can't walk down the hallway without tripping over the wallpaper. So I don't see that kind of, you know, real organization. A lot could happen if the U.S. leaves the World Trade Organization like they are talking about doing now. Because if that happens, then really the U.S. will be on the outside. But as long as the U.S. is in the World Trade Organization, then we're still part of the club, even if we're having a short-term spat. So that won't be so bad. So keep your eye on the World Trade Organization, see what happens there.
Sean, thank you so much for chatting with us.
Thank you very much. I always enjoy it.
And Sean, could you list some of the other websites that you're involved with and you're the editor of?
Sure. EdelSonInstitute.com. That's where my free columns are published. And I also have Wealth Supercycle. That's my monthly newsletter, and Supercycle Investor, which is my premium newsletter. And they're all good stuff, you know. I mean, Weiss Ratings. We have a whole bunch of good products, and we rate stocks as according to which ones are more safe than others. And in these kinds of days, that's not actually a bad thing to have. So people should check that out as well.
Thanks again, Sean.
Thank you.
Guest has been Sean Brodrick, Senior Editor at WeissRatings.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. If you have any questions for the show or our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.